Hello everyone and welcome to F2 again. We are going to continue our accounting for materials. We already did types of material in our first video. We did study what is free inventory and we also went through the reorder level. In this video, we are going to cover a minimum inventory level and we'll do some questions. We are also going to cover maximum inventory level with questions, okay? And by the end of this video, I'm also going to give you some formulas that you need to memorize in order to make sure that you can do any kind of question that comes up in the exam from this part of the syllabus. So let's start with our first topic, which is minimum inventory level. Now, what is minimum inventory level? Minimum inventory level is actually the minimum amount of stock that businesses should have all the time, right? So businesses want to make sure that the level of stock in the warehouse does not fall below this level. Now, what is the reason why businesses should have a minimum inventory level? The reasons why businesses should maintain a certain amount of stock at all times is because sometimes it is possible to have unexpected demand, especially if there is a different season like Christmas. So customers are going to buy more in certain seasons, right? So in order to make sure that business can make sales during those increased demand seasons like Christmas, we want to make sure we have certain amount of inventory all the time. If we do not have inventory at that time, what will happen? Business will lose customers, business will lose sales, and that is a loss to the business. So in order to avoid that situation, we want to make sure business has a certain amount of inventory maintained all the time, right? So that's minimum inventory level. Now, please make sure sometimes in your exam, minimum inventory level can also be called buffer stock, right? It can also be called safety stock. So all of these three terms mean the same thing: minimum inventory level, buffer stock, or safety stock, right? So again, what is minimum inventory level? Minimum inventory level is the minimum amount of stock that business should always hold, okay? Because there can be unexpected demand, right? To meet unexpected increased sales demand and to avoid loss of customers and sales. So these are the two main reasons why we need to have certain amount of stock maintained all the time. Now, how do we calculate minimum inventory level? I'm going to give you the formula. The formula to calculate minimum inventory level is reorder level minus average usage times average lead time, right? Now, okay, we have already calculated reorder level in our previous video. What was the formula for calculation of reorder level? It was maximum usage times maximum lead time. Yeah, so this is what we did in our previous video, calculation of reorder level. So the formula for minimum inventory level is reorder level minus average usage times average lead time, right? So what we are going to do now is let's see how we can apply this formula in a given question. Okay, so here is our example. Example is a domestic appliance retailer with multiple outlets sells a popular toaster known as AutoCrisp 2000, for which the following information is available. We have average sales 75 per day, maximum sales are 95 per day, minimum sales are 50 per day. Lead time, it can be from 12 to 18 days, which means minimum lead time is 12 and maximum lead time is 18. Reorder quantity is 1750 units. And we have been asked to calculate the minimum inventory level. Okay, so if you remember from our previous video, the reorder level was calculated using the formula maximum usage times maximum lead time, right? So in this case, the maximum usage is our maximum sales, 95, and maximum lead time is 18. So we get reorder level of 1710 units. Okay, so that's our reorder level. Now we know that the formula to calculate the minimum inventory level also requires average usage and average lead time. Okay, so average usage is already given to us, which is average sales of 75 per day. However, we will have to calculate average lead time, which is again the average of 12 and 18. So our average lead time is going to be 12 plus 18 divided by 2, which is 15 days, right? Which is going to be 15 days. And we are going to, okay, and now we have average lead time. Now the formula to calculate the formula to calculate minimum inventory level, it is reorder level minus average usage times average lead time. Okay, so let's put the values in. We have reorder level of 1710 minus 75 is the average sales per day, and 15 is the average lead time as we calculated here. So we have the minimum inventory level of 5850 units. So that's our minimum inventory level. Okay. Now what we can do is we can move on to our maximum inventory level. Maximum inventory level is the opposite of minimum inventory level. Minimum inventory level is business should not hold inventory less than certain amount, and maximum inventory level means business should not hold inventory more than certain amount. Now there are reasons to have maximum inventory level as well. So what are the reasons? The reasons can be, if the business is holding more than what it requires, there is a risk that the stock will expire, and that is an additional cost to the business. Similarly, holding inventory more than a certain amount means there is going to be excessive storage cost, because stock has to be stored in the warehouse. So holding too much inventory means we have to pay for a bigger warehouse, so our storage cost will go up. Therefore, in order to make sure, first of all, the stock does not expire, okay, we can use it, and secondly, to make sure that storage cost is not excessive, we want to make sure there is a maximum inventory level. We want to make sure the business does not hold stock more than certain amount, right? So that's what our maximum inventory level is. Maximum inventory level is the maximum amount of stock business should hold at any given time. It is the maximum amount of stock the business should hold at any given time. Business should not hold more than this amount. And as I discussed before, the reasons why we have the maximum inventory level is because we want to avoid material expiring. Okay, so in order to avoid expiry cost, and this especially applies to material which has very short expiry period, like fruits or vegetables. So they are going to expire very soon. So business cannot afford to have a huge amount of stock of fruits or vegetables that are going to expire in next few days, right? So it's better to order fresh fruit and vegetables than holding a lot of this material at any given time to minimize the storage cost. So these are the two reasons why business wants to have a maximum inventory level. Now moving on to our formula. What is the formula to calculate the maximum inventory level? The formula to calculate maximum inventory level is reorder level plus reorder quantity minus minimum usage times minimum lead time. So this is the formula to calculate. We have additional reorder quantity here. Reorder quantity means how much quantity business orders to suppliers at any given order. Whenever business orders to suppliers, how many units it normally orders. So that is your order quantity or reorder quantity. Okay, so that's our formula for calculation of the maximum inventory level. We are going to see the same example again. So that's our example. Again, we have the same question, but here the requirement is to calculate the maximum inventory level. So we are given the average sales 75 per day. We are given the maximum sales 95 per day, minimum sales of 50 per day. We have lead time from 12 to 18, and we have the reorder quantity of 1750. Please make sure that you still remember the reorder level as we calculated in our previous question. The reorder level was 1710, and that is calculated using maximum sales of 95 per day and maximum lead time of 18. So 95 times 18 is our reorder level of 1710. Okay, so how do we solve this? We know the formula to calculate the maximum inventory level is reorder level plus reorder quantity minus minimum usage times minimum lead time. So let's put the values in. We have reorder level of 1710. Okay, we have reorder quantity of 1750 as it is given here. 1750 is the reorder quantity, this one, and 1710 is our reorder level minus minimum usage. Now minimum usage is minimum sales, which is 50 units per day, and minimum lead time is 12. So 50 times 12 is minimum usage time minimum lead time. So if you do the calculation, we'll come up with the answer of 2860 units. So that's the maximum amount of units business should hold at any given time. The stock should not exceed 2860 units. Okay, so that's your maximum inventory level. Now, okay, I want to give you some formulas that you need to memorize to make sure that any questions on materials you can solve in exam. So the first formula that I want to give you is average stock. What is average stock? Average stock is buffer stock. Now buffer stock, we know it is minimum inventory level, or it is also known as safety stock. So average stock is equal to buffer stock plus reorder quantity divided by 2. So that's your average stock. Now please note that in some cases a business may not have buffer stock. If the business does not have buffer stock, then you're going to ignore the buffer stock here. In that case, average stock will simply be equal to reorder quantity divided by 2. Okay, so that's your average stock formula. Similarly, you have total holding cost. How much is the total holding cost of the business? It is equal to average stock times holding cost per unit per period. Now this period can be per month, per week, or per year, or any given period. So that's your formula to calculate total holding cost for the business. Normally in your exam you will have to calculate total annual holding cost. In that case the formula would be average stock times holding cost per unit per year, right, per 1 year. So that is the formula to calculate the total holding cost. Similarly, we have the formula to calculate the total ordering cost. The total ordering cost is simply number of orders times cost per order. So how many times you place the order and what is the cost of placing one order, you multiply both of them, you get the total ordering cost. Okay, in your exam mostly you are going to calculate total annual ordering cost. In that case you will have to see how many orders you are going to place in 1 year times cost per order. Okay, now moving on, the last formula that we have is number of orders that you are actually using in your total ordering cost formula. So number of orders are equal to total demand over order quantity.